again, I'm the owner, marketing director over at J&B Insurance and Taxes. Really quick, we're going to talk about tax. This is a part of my series of tax prep basics. This is our our second video. I'm going to talk about income very quickly. Okay, we'll talk about different forms of income that you're going to see as a tax preparer from your clients. Okay, now it's very important we make sure that we're in the business of reporting income, not getting people's refunds, which is a part of our business. It's a big part of our business, but it's not the sole reason that we're filing people's taxes. We need to walk in the room, understand there are people who will pay taxes. If they pay taxes, that's not necessarily we did a bad job. Because in some cases, people pay taxes and actually have to pay taxes because we do a good job doing our research. We might have saved them some money that they would not save on their own. And we'll get into that later, but for right now, let's go over some of the basic forms of income. And there's some I left off on purpose, like your scheduled income, which comes from rental properties. I left off dividend income, which comes from investments when they start to pay out. We'll get to those at a later date. We're not going to do that on the tax prep basics. But what I will say, we do come across a form of income as a rule of thumb, and we don't know exactly where it goes, exactly what it is. 1099K is a prime example of something, and that is a source of income that comes from people who have credit card accounts, merchant services, their own businesses, or they're operating some type of operation, company, even a nonprofit in some cases. When they have credit card sales, you get 1099K, and I'll explain to you how to deal with that at a later date. Okay. For right now, we're going to focus on what we have on the board. This should go first by having to the right. It's the W-2. I'm going to try to go through by these things in order. I think of the most likely you ought to see them as you're preparing taxes. Your W-2 is pretty much your standard income form for the American worker. You'll see people coming with W-2s all the time. Really quick question. You got a guy comes in here. He's a neighborhood guy, known for a while. He asks you this question, okay? And he's like, well, I got a job. I'm working with a social. Social's not mine. I get this question all the time. Social's not mine. How should I file my taxes? Should I file my taxes with the social, my W-2, or should I use my real social? Sometimes we get this with non-U.S. citizens that are working here. And not to be stereotypical, it comes from all types of cultures. This is a really good question. It's your job as a tax preparer to report the income. But as you can get in trouble with the law if you use a social security number for a person that's not their social security number. That is actually a definition of identity theft. Okay? But that's not our job to enforce. That's our job to report the income. So the correct answer when this happens, if you have a W-2 or a 1099, I'll get to that in a second, and it does not have the taxpayer's social, but the social client has been working, the correct answer is to use the taxpayer's ITIN number. If he doesn't have one, we'll file W-7 and get him one. And from there, we'll go ahead and use that number to file his taxes. We do not file that W-2 with that social security number, especially after having working knowledge that social security number is not the taxpayer's number. Okay, for clarity, if it's not his social, don't you dare file it, all right? You get yourself in trouble. You mess somebody else's taxes up, get somebody else having tax. You have some perfectly innocent person having tax liability, and you want to be doing your clients much of a service seizure, okay? So W-2 is the thing we're most likely to see. The W-2 will have boxes corresponding for the income and taxes paid out on. Normally the software you just plug the numbers in the box. If it's on the W-2, that's what you report. You not report more, you not report less. For a variety of reasons. The first one being it's illegal. The second reason is it's not going to process very well with the IRS if the W-2 numbers don't add up. Keep in mind they match these things. They cross-reference them. You can cause your taxpayer to have delays if this thing is not processed properly, okay? So enter the information as it appears on the W-2. There's going to be more on the W-2 than just your income taxes and your Social Security tax, Medicare tax, and your income. You're also going to have withdrawals and contributions to 401ks, health care funds, and some other things. We'll get to those in more detail at a later date, okay? 1099 miscellaneous. That is the 1099 you see people talk about. I got a 1099 employee. This is one of the most common 1099s you will see. You go to the subcontractors. It goes out to sometimes self-employed people who are doing a job. I guess that makes them a subcontractor as well. It goes out to people from doing all type of business, everything from doctors to lawyers, people in insurance like our company. We see 1099s. The 1099M or miscellaneous, okay, it's a difference. It's probably the second most common source of income form you'll see out there, okay? And the good thing about 1099 as opposed to W-2, once you have a 1099, depending on how you're being paid and how it's being structured, it opens up you for a Schedule C, and what that means is you get a lot of additional deductions being a small business owner. Things that W-2 person that cannot write off, such as some of your work-related meals, such as mileage that you use in driving to perform your job, such as tools and equipment you buy to perform your job or your task, okay? 1099 employees have certain requirements that these guys on the W-2 side don't have. They have a little more freedom by definition of being a 1099 employee. They use their tools and equipment, not the companies for the most part. You're going to have people come to the office and tell stories, and their 1099 status might sound a lot like a W-2 status. Okay, just like the guy with the W-2 with the Social Security numbers didn't match, your job as a responsible taxpayer is to have a consult with your client and let them know that's a possibility. He might need to have his employer restructure how things are set up for him payroll-wise, especially when he's doing W-2 responsibilities. But for the purpose of this exercise, you report it as it is. You do not take it upon yourself to change that 1099 to W-2, okay? 1099 people do not take out taxes for the most part. I have seen a very few 1099 employees or recipients take out federal withhold taxes, okay, for the most part. I think they can in some states. I'm not quite sure about Texas, but one thing I will say for the most part, nobody ever does it. That means they have to pay a self-employment tax. That means sometimes they'll take home less if they're refund eligible because they have not paid that self-employment tax. And we will talk about that in depth later on, okay? 1099 retirement. There are a lot of different variations of 1099 retirement. You see everything from life insurance being paid out to retirement funds. The most thing that you're going to see the most of when people who are working, or I would say between the ages of 30 to probably the early 60s, they will pull money out of a retirement account prematurely. Let me take that back. Let me back that number up. Before the age of 59. Because after 59 and a half, in some cases, you can start pulling money out of some of these retirement accounts. But the thing we'll see the most of people, let's just say between the ages of 30 to 59, I'm just estimating there, there's exceptions to every rule. In some cases, depending on the type of RA you have, you actually will be taxed after you pull money out, which is another story for another day, which we will not worry about at the basic prep level. But that does go back to our deal when we see a 1099, something we're not familiar with, the correct thing is to come and ask somebody in the office. And we'll get you a correct answer. But my whole point is, this deal right here, this asks you your taxable income. Sometimes clients will walk in here. You see a lot of them, people draw money from the 401k. I know during Harvard when people were displaced, people weren't working, everybody's cashing out their 401k. People are being told at some of their jobs that you can take that money out and not be taxed on it. That is a lie. Okay, once you touch this money in the 401k, the whole purpose you put it in there is it's tax deferred, but you can't touch it until retirement age. So if you come out and pull it early for anything, including hell or hot water, you'll still receive taxes on it. Now, in some cases, you won't receive penalties on it for prematurely taking it out. Okay, that's a totally different ballgame. That's not our department. Our department is the taxation department. And we don't take those taxes out manually. Once we do computations, what's going to happen is the taxable income is going to increase, and that's going to cause these guys to take a tax hit that year. Hopefully, we try to lend advice to people when they're taking 401k out. You know, when they're pulling money out of their 401k, we try to lend advice. Some things that immediately make sense are going to be education. Of course, everything's going to give you a bigger return on investment than your than the current rate of your investment in your retirement accounts. So we're not talking about buying a bridge in Brooklyn. We're talking about maybe something entrepreneurial, maybe something real estate wise. It just makes a lot of sense, and it's been carefully thought out and worked out. You see this opportunity there, and that is your source of cash. Then we would say go for it. Okay, that's normally not our job. We don't get to a lot of investment planning. I would probably refer to somebody who is stronger in it. But those are things that make sense to me. One thing about these 1099Rs, once people walk in the office, the damage is already done. They come in the office after tax season, February, March, June, January, April. You can't really advise them after they pull it out. Now, if they call and ask you beforehand, then we try to give our 2 cents then, but I'll be honest with you, once they pull it out, it's a done deal. There's not a whole lot we can do at that point to mitigate it, okay? 1099G, that will be the 1099. You guys will see a lot of people unemployment for the most part. And most of these 1099s will have boxes marked on them, and those boxes are going to kind of tell you what the source of disbursement is. Read those boxes because you don't want to assume everybody. In some cases, these people you'll be given specific instructions that this 1099R income is not taxable, or there could be withholdings right there. So just do not enter income and rubber stamp it. Make sure you take the time to read the 1099s carefully to see if taxes have been taken out, to see if the income is even taxable, and to see what type of disbursement it is, to see how it should be treated tax-wise. 1099 SSA, Social Security. Okay, you got a lot of retired people coming, a lot of retired, older people coming and start to collect Social Security. That needs to be reported. Okay, in some cases, it can be treated as taxable income, depending on the income bracket and depending on whether or not they're married or single at that age. Okay, so when you have a question about that, please get with somebody in the office, and we'll do our best to explain explain it pertaining to that person in that situation. Now let's talk about the Schedule C. Okay, our non-W-2 income or 1099 income goes here. Sometimes the Schedule C will correspond with the 1099s. This depends on how the 1099 income comes from. Okay, small businesses, corporations, subcontractors, LLCs. These will be the companies. These will be the entities that you're most likely to see in the Schedule C. These are all going to be sole proprietorships and partnerships go there as well. These are most likely pass-through entities. Okay, what that means is that as what you make from your Schedule C, that's considered what's left over is your personal income that you're taxed on. Okay, so this basically operates separately. Once you do all the calculations, and once the client comes with all the calculations already done, and we take income, revenue, and we subtract expenses, and we have a profit. That profit or loss is attributed to the income of the client. Okay, must be substantiated by accounting records, income statement, profit and loss statement, something of that nature. Okay, we do not make up Schedule C's around here. These are filed after we have a discussion with our client, and then they're filed after we have worked with our client to help them, at the very, very least, reconstruct their expenses throughout the year. And we use things like bank statements, accounting records to come to the conclusions. Okay, you have to be backed up by something that covers the client, that covers you. This is not the form, just the file, Okay, so normally I can't really teach you. I can teach you what goes where in Schedule C, but at the end of the day, you have to have something to start with. Okay, I can't teach you how to do Schedule C if your client has nothing to substantiate as a business. Now, as far as our due diligence requirements and substantiating Schedule C, let's go ahead and talk about the difference right now. A client come in, we can see that he has a website, commercial, social media page, and we know they're actually functioning, and we know that they're actually operating, okay, their business. But at some point, we got to sit down with these guys and figure out a way to put the numbers together on paper if they don't have existing reports, accounting records, or a journal, accounting journal, or accounting ledger. And there's multiple ways we can help them do so. There's multiple ways the clients can produce information. Okay, so long story short, yeah, we want to see your DBA. Yes, we want to see your business scores. Yes, we want to see proof that you operate through a website, a social media, or advertising. That's great. But we also need proof of your numbers. So we need proof of operation, and we need proof of your numbers for everybody to be kosher in the eyes of IRS. Okay, so basically we're gonna go through this real super quick. These are different forms of income that you'll see during tax season, and then we'll have to help you guys prepare our clients' taxes. W-2, 1099 miscellaneous, or 1099M are the two most common. 1099 retirement, 1099G, 1099 SSA, which is Social Security. Those are relatively common as well. Not as common as these two, but you see them quite a bit. Schedule C is a form to prepare for our clients. We don't make it up. We will help our clients do reconstruction if their accounting is not together for additional charge, if you don't mind me adding. But it's not something that we file just to file. It has to be substantiated by quite a bit. Okay? So if you have any questions, drop a comment below. Inbox me. Thanks for watching and listening. We got more video coming. Hey, if you're having a hard time with any of this stuff, or it's like this new concepts for you, feel free to send me a text, 713-340-7963. That's 713-340-7963. I'd love to see if I'll be able to help you guys. I want y'all to be successful. I want you to learn the things I'm teaching. Don't freak out if you don't get it all in one day. That's why we have it on video so you can watch it as many times as you need it. That's why we have written material so you can go over many times you need it. That's why we have the accessibility of learning to make sure you get things done correctly, okay? You learn, in a helpful environment, okay? Thank you very much for listening and watching. You guys have a great night.